So as I told you before, our course is devoted to the digital finances, and we will start with the first module, Introduction to Digital Finances. So please don't worry, I will provide you with all of the slides of the presentations of the course, so you can go through them once again if you wish, preparing for an exam. So the next slide. The first topic will be overview of financial innovations. And once again, welcome everybody to today's lecture, Financial Innovations and Digital Finances. Within the course, I will be excited to explore with you all together how technology and creative thinking are revolutionizing the financial services industry and financial technologies and digital finances as well. First of all, I would like to tell you that throughout history, financial innovation has been a key driver of economic growth and development as well. And from the invention of money itself to modern digital payment systems, for example, financial innovations and financial technologies has continuously transformed how we manage, move, and invest money. So, in today's lecture, we will examine what especially makes financial innovation unique, and we will explore different types of innovations from mobile payments, for example, to decentralized finance, and we'll discuss both opportunities and risks they present. And I'm sure that this knowledge is critical for everyone looking to work, for example, in financial services, as the pace of innovation is accelerating, actually. So with these kind of new technologies, like, for example, AI, blockchain, and APIs, so which are reshaping traditional banking models right now. So, and I hope we will also look at real examples on how both established banks, for example, and also new fintech companies are driving innovation. And we'll discuss the delicate balance regulators must strike between that two kinds of players to foster innovation and maintaining financial stability. So, therefore, I encourage you to think critically and engage in our discussion, as many of you will likely be directly involved in shaping financial innovations in the future, I'm sure. So, first of all, I would like to ask you a question. So, what is innovation? Here you can see a QR code to the quiz form, but please ignore it. I would like to ask you to send me your answers through the chat. Please take 5 minutes, for example, for that, and we will go on after discussing your answers. See, as you can see here in the slide, there are sub questions to this question, general question. So that is why I would like you to think about some recent innovations, for examples you've encountered, maybe a new app you are using, a service that changed how you do things, or a product that solved problem in a new way, for example. Okay, great. So I can see your answers. Yeah, it's integrating new technology into business and overall into everyday's life. Yeah, innovation is to think outside the box and come up with solution. Yes, innovation is the process of introducing new ideas. It's absolutely a new idea or solution of some problem. I think essential new technology that hasn't been used before, substitution of something. Yeah, great. A lot of answers. I'm really glad about it. So, I will consider all of your answers more precisely afterwards, but now let's go on with the deep dive into the innovation, and especially in financial innovation. So let us consider what innovation is according to the different sources of information. So first of all, let me share with you the definition from Merriam-Webster dictionary. And it generally states simply that innovation is the introduction of something new, but there is much more to unpack that here. So first of all, I want to emphasize a crucial distinction. That is, innovation is not the same as invention, not the same as invention. So let me explain why this matters. Invention is creating something entirely new, but innovation is about successfully introducing and implementing new ideas, products, or methods that create value. And that is really important. So let us consider this example. For example, as you may know, Thomas Edison, he didn't invent electricity, but he innovated by developing a practical electric light bulb and, more importantly, a system for electric power distribution that could be widely adopted. So, and turning back to the financial world, we could say that in financial world, this distinction is particularly relevant. For example, as we may know, mobile banking was a new innovation, or was a new invention, more precisely. So because it combined existing technologies like smartphones and banking services. And the innovation was here in how it transformed the way people interact with their banks, actually. And what makes innovation powerful is that it represents a break from traditional approaches, because it requires actually not just creativity to come up with ideas, but also the initiative to implement them successfully in the real world. And as to me, this is why innovation is absolutely crucial for the growth and competitiveness of companies and industries. So in today's financial sector, those who fail to innovate risk becoming absolutely very quickly. So the next slide. Now that we understand, I hope so, what innovation is, let's explore different ways to classify it. And here you may have heard terms like, for example, disruptive innovation or incremental innovation. So I'll try to help you to understand exactly what this means. And first of all, let's look at this innovation matrix that you can see on the slide that classifies innovation based on two key dimensions: the technology it uses and the market it serves. So, and this framework overall is particularly useful in understanding financial innovations. So let me give you some concrete examples from the financial sector for each type. First of all, for example, what is incremental innovation? That terms. Think of your bank adding new features to their mobile app, for example. So it's an improvement, but it's not revolutionary. So, and this is an incremental innovation. So what can be an example of radical innovation? So we can consider the, for example, introduction of mobile banking itself. So it completely changed how we interact with the banks. Because of that, this is a radical innovation. And then goes disruptive innovation. So, for example, we can look at the blockchain technology and, for example, at cryptocurrencies. Now, why? Because they are creating entirely new markets and challenging traditional banking models. And that is why they are called disruptive innovation. And that is the difference between incremental, which are evolutionary, not revolutionary, radical, which is more revolutionary, and disruptive, which changes not just the special product or even entity, but it can change a whole industry. So actually what's fascinating about this matrix is that it helps us understand why some innovations succeed while others fail. And a highly radical technology, for example, might fail if it doesn't match market needs, while at the same time a seemingly simple incremental innovation could have massive success if it solves a real customer pain point. So, and I want you to notice how fintech companies often start with one type of innovation but evolve over time. For example, PayPal began, as you may know, as a disruptive innovation, but has now become part of the mainstream financial system. So, as to me, that is very interesting indeed. Next slide. So, and most innovations are incremental improvements in existing concepts, products, and services. And let us go deeper into the most common type of innovation we see in the financial sector, which are, as we said before, incremental innovation. One of them is incremental innovation. So, despite all the hype about disruption, most successful innovations are actually incremental improvements. And for example, in banking and finance, incremental innovations happen all the time. So you can think about, for example, contactless payments. So they weren't revolutionary change from chip cards, but they made transactions faster and more convenient. And this is a really perfect example of improving an existing product to attract more customers. So, therefore, the beauty of incremental innovation is that it's generally less risky and more immediately profitable. So, because when a bank improves its, for example, online banking interface or adds new features to its mobile app, it's usually responding to specific customer needs. And they can see quick returns on investments, quick ROIs, return on investments. However, beside this, and this is crucial to understand, relying solely on incremental improvements can be dangerous. And let me explain why. So, for example, while you are making small improvements to existing products, someone else might be developing something that will make your entire business model obsolete. So, and this is of danger. And that's why successful financial institutions typically pursue a balanced approach. For example, if we take JP Morgan Chase, for example, and they continuously improve their existing services while also investing heavily in blockchain technology and artificial intelligence. For example, for future breakthrough innovations. So, finally, the key takeaway here is that while incremental innovations are vital for example, maintaining competitive advantage and customer satisfaction as well, they shouldn't be on your own innovation strategy. The next slide. So now let's talk about one of the most powerful yet frequently misunderstood types of innovation, which is disruptive innovation. So this concept generally was introduced by Harvard professor Clayton Christensen in 1995. So, and generally, it's particularly relevant to what's happening in finance today. So, and the essence of disruptive innovation is, this is crucial to understand as well, is that it initially serves a small and often less profitable segment that established companies tend to ignore. So let me illustrate this with a modern example. For example, when PayPal first started, traditional banks didn't see peer-to-peer payments as a significant threat because it seemed like a small marginal market. So, and for example, you can look at the example on our slide, which is Tesla and Netflix. Similarly, in finance, so you can consider how neobanks like Revolut or N26 started by targeting young, tech-savvy customers with basic services, and traditional banks therefore initially dismissed them because also these customers weren't their most profitable segment. And moreover, one of the most fascinating aspects of disruptive innovation is that it often starts with an inferior product by using traditional metrics for that. And for example, when digital wallets first appeared, they couldn't offer the full range of banking services, but they excelled at one thing. So, which is making payments simple and convenient. And that is the root of their popularity. And here is the key point that you have to pay your attention on. Disruption happens gradually, but its effect can be devastating by established players who don't adapt. And for example, we've seen this with the traditional banks who initially ignored fintech competitors, but to find themselves scrambling to catch up years later. So, and the lesson for future finance professionals is clear. Don't just look at who's competing with you today. Pay attention to new entrants serving segments you might be ignoring. And maybe they could be tomorrow's major competitors for you. Next slide. So now let's examine another crucial type of innovation that's particularly relevant in banking, which is sustaining innovation or evolutionary innovation. And this is how established companies stay competitive and grow their market share. So let us look first of all at the three key points on our slide. First of all, sustaining innovation improves product performance and targets demanding customers who are willing to pay premium prices. And in banking, for example, you can think about how Goldman Sachs continuously enhances its trading platforms for institutional clients, and how private banks develop more sophisticated wealth management services. And what may be fascinating about sustaining innovation is that established companies usually win these battles. Because, for example, JP Morgan has successfully maintained its leadership in investment banking by continuously improving its services and technology as well. And the bank invests millions or billions of dollars in technology each year to enhance its existing products. But Here is the interesting contrast with the disruption. You can notice, for example, how the iPhones, um, uh, uh, which is mentioned as an example that transitioned from disruptive to sustaining innovation. And we see, for example, we can see the same pattern in fintech. For example, companies like Square started as disruptives, but now increasingly compete through sustaining innovation. And let me emphasize a critical point for your future career. Established companies are generally very good in sustaining innovation because they have the resources, expertise, and existing customer relationships. However, this same strength can make it harder for them to pursue disruptive innovation. And understanding this dynamic is crucial, whether you plan to work in traditional banking or fintech. And success often depends here on knowing when to pursue sustained innovations and when they attempt disruption. Next slide. So now let us turn your attention to radical innovation. So perhaps the most dramatic and transformative type of innovation we can see in finance. So what makes radical innovation special is, as to my opinion, is that it combines revolutionary technology with completely new business models. And for example, we can look at our examples like personal computers, internet, robotics, artificial intelligence, blockchain, and energy storage. So all these technologies didn't just improve existing systems. So they really fundamentally transformed how we do things in finance and in other spheres. For example, blockchain technologies may be a perfect example of radical innovation. So, and now let us explain why blockchain is truly radical. Because it's not just a new technology for processing transactions. So it introduces an entirely new way of thinking about trust and about intermediation in finance. So it challenges the very foundation of how traditional banking works. And another example that we can see here is example of radical innovation in finance is artificial intelligence, of course. For example, in its implementation and risk assessment. Because in risk assessment, it's not just automating existing processes. It's fundamentally changing how we evaluate creditworthiness by analyzing data patterns but that human could not possibly process. However, and this is crucial, radical innovations are rare and extremely risky. And for every successful blockchain application, there are dozens that fail, really. And the key is that when radical innovation do succeed, they can transform entire industries. So I think as a future professionals in this sphere, possibly why not, you need to understand that radical innovation requires significant resources and a high tolerance for risk, and often a complete rethinking of existing business models. Next slide. So now we come to a crucial insight that will help you to understand successful innovation in finance, and which is the most helpful, impactful, and they often combine elements from different categories of innovations we discussed before. So let me give you a powerful example from the fintech world. For example, let us consider how mobile payment platforms like Apple Pay may combine multiple types of innovation. So first of all, it's incremental in how to improve the payment expertise. Then it's sustaining in how it builds on existing card networks. Then it has disruptive elements in how it changes consumer behavior. And finally, and it has a really radical aspect on its integration to biometric security. And this is particularly relevant to modern banking because, for example, you can look at how for example, the most successful digital banks combine these kind of technologies. For example, incremental improvements in user interface, sustaining innovations in core banking service, disruptive approaches to customer acquisition, and radical innovation in data analytics and personalization, for example. And what is very interesting in that successful innovators don't limit themselves just one type of innovation. So they understand usually when to use each type and how to combine them effectively. So we have come up to the next question. It sounds like, what are financial innovation? So the previous one was about innovations in general, and this is about financial innovations especially. So let us go deeper into the financial innovations. Let's focus specifically on that. So, which means the changes that are transforming banking and financial services today. So, financial innovations are fascinating, really, because they are essentially about solving problems in how we manage, move, and invest money. But they're not just about technology. So they are about new financial instruments, new institutions, and even entirely new markets. So, and let me put this in perspective. Over the past 30 years, maybe, financial innovation has completely transformed banking. And you can think about it. So, for example, 30 years ago, we had to visit a physical bank branch to perform any operation. And today, most of us rarely set focus in a bank, really. But what else makes financial innovation particularly interesting? It's, I would say, it's that it's driven by very specific needs and limitations in the financial sector. For example, the need for faster, cheaper payments. And it led to innovations like mobile wallets, for example. The desire, for example, for more efficient investing gave rise to robo-advisors, as you may know. And what else is crucial to understand is that financial innovation bring both benefits and risks. And for example, we'll discuss it later, but same innovation that make finance more efficient, and accessible as well, it can also create new forms of risk and instability. Next slide. So now let us examine what makes financial innovations unique compared to innovations in other industries. So, and these characteristics are crucial for understanding why financial innovation follows different patterns than, say, for example, innovation in manufacturing or retail. First, please notice the intangible nature of financial innovations. For example, unlike a new smartphone or car, the majority of financial innovations are invisible. So they are systems, processes, business models, and for example, when Visa payment system introduces a new payment processing system, so you can't see it, but it affects millions of transactions globally. And the second characteristic is really fascinating because financial innovations can be applied across geographies almost instantly. For example, when TransferWise, fintech company, developed a new way to handle international money transfers, they could roll it out globally much faster than, say, I don't know, than say Starbucks could open new coffee shops. And the third characteristic is particularly challenging for financial institutions. And these innovations are rapidly replicable because when one bank introduces a successful new feature in their mobile app, for example, competitors can often copy it within months or even weeks. And this is why continuous innovation is so crucial in finance. And finally, and this is what really makes financial innovation so powerful, they can have an incredibly high impact relative to their cost. And for example, a single algorithm trading innovation can affect billions of dollars of traders, or a new mobile payment system, for example, can transform how millions of people handle money. So, finally, understanding these characteristics is essential for your future careers if you like to be financial innovator. Next slide. So let's consider what do financial innovations include. So let us explore the major categories of these financial innovation that are reshaping the industry. And let us walk through each type with real-world examples that show how these innovations are changing finance. First, look at new financial products and services. For example, mobile payments like AppPay or peer-to-peer lending platforms like Lending Club, for example, and robo-advisors as well, like, I don't know, Wealthfront, for example, they aren't just digitizing existing services, so because they are connecting entirely new ways to manage money. And then we have the delivery methods. For example, online banking app or online banking in general might seem obviously now, but it revolutionized how we interact with banks. For example, you can consider how remote insurance policy issuance during the, I don't know, for example, pandemic, or how it transformed an industry that traditionally required face-to-face meetings. And moreover, the technology category is particularly exciting as well, because, for example, blockchain, big data, artificial intelligence, they aren't just buzzwords. So, because they are fundamentally changing how financial institutions operate even. For instance, JP Morgan Coin, which is contract intelligence software, can review commercial loan agreements even in seconds instead of hours. And then new business models are perhaps the most disruptive category, because, for example, crowdfunding platforms like Kickstarter and marketplace lenders like Prosper, they all have created entirely new ways to connect those who need capital with those who have it. And the last two categories here, they are new tools and methods and infrastructure changes. So they might be less visible to consumers, but are equally important. And for example, you can think about how algorithmic trading has transformed the stock markets, or how real-time payment systems are changing how money move between banks. And finally, what is really crucial to understand here is that these categories often overlap and combine to create even more powerful innovations. Next slide. So now let us walk through the key goals that drive financial innovation in today's world. So as we explore these objectives, I hope you will see how they shape the development of the new financial products and services. And the first major goal is improving both quality and availability of financial services, of course. And for example, when we innovate in finance, we are aiming to make services not just better, but more accessible to a broader range of users. A second critical objective is increasing the speed and efficiency of financial transactions within or while reducing their costs. So you can think about how mobile payments have transformed the way we transfer money. For example, making it easy and nearly instantaneous and much cheaper than traditional wire transfers, for example. And the third key goal focuses on expanding access to financial services through new delivery models. And for example, we're seeing this with mobile banking reaching previously unbanked population, and fintech companies creating innovative ways to deliver financial services. And finally, there is a regulatory aspect. That is, financial innovation help institutions meet regulatory requirements more cost effectively. And this is particularly important in today's complex regulatory environment. Okay, let's go on. Now, let us explore the major directions where financial innovation is leading today. So, I'll highlight these three key areas that are fundamentally transforming the financial services landscape. And here, the first major direction is digital payments. So we are seeing remarkable innovations in this space, from mobile wallets that let you pay with your smartphone to peer-to-peer transfer systems that make sending money as easy as sending a text message. And now we are witnessing the emergence of stable coins, which aim to combine the benefits of cryptocurrency with the stability of traditional currencies, of course. And the second significant direction is alternative finances, or especially alternative lending. This is particularly exciting because it is democratizing access to credit. And we have, for example, peer-to-peer lending platforms connecting borrowers directly with lenders, crowdfunding platforms enabling group investment in projects, and microfinance initiatives making small loan access more general for the public. For example, entrepreneurs who might be overlooked by traditional banks. And
Sorry, can I ask a question?
yes, yes.
Yeah, sorry for interrupting. I just wanted to ask about, these schemes of payment where it's like buy now, pay later. You understand what I
Yes.
mean? Yeah, right.
Yeah,
So
sure.
are they a part of this alternative lending direction?
So we'll talk about this later on. Yeah, we are going to, but I would say that it's so it depends on the uh, classification of the methods of the means of the alternative payments. For example, I would consider alternative lending, sorry, as as a mean to provide funds to the final customer. For example, for the purpose of uh, uh, for the purpose of development his project or his business, for example, or something else. But BNPL payments, it's some kind of quotas, which are very popular in Latin America, for example, which is not always uh, which is not always based on the interest payments, for example. It may be based, the purpose of the BNPL mean of payment may be to stimulate the demand for the product and not to earn on lending. That is why I wouldn't consider actually it as a direct mean of alternative lending. So, but we will talk about that later on. Don't worry.
Okay, thank
Uh,
you. But
so,
it's innovation, right? Can we consider
yeah,
this
yeah, yeah,
payment?
yeah, yeah,
Okay,
yeah, yeah.
got it.
Of
Thank you.
course. Uh, the third key direction is wealth management here, and here we can see technology which revolutionize how people invest and manage their money. For example, robo-advisors are making professional investment management accessible to people with similar portfolios, while social trading platforms, for example, allow investors to learn from and copy the strategies of successful traders. And what I find here particularly fascinating is how these innovations are often interconnected. For example, how digital payment systems might integrate with alternative lending platforms, or how wealth management tools might incorporate social features, for example. And I hope, I'm sure that everyone here in the audience on this class uh, uses or have used any of the innovation financial services, uh, even maybe alternative lending or something else. Next slide. So now let us explore an important aspect of financial innovation, its double-edged nature. So while innovations bring significant benefits, they also introduce new risks that we need to understand and manage carefully. So now let me start with the benefits, which are quite substantial. For example, financial innovation has dramatically lowered costs across industry. You can think about how much cheaper it is to make, for example, international transfers today compared to just a decade ago. And we are also seeing vastly improved access to financial services with mobile banking, for example, reaching previously unserved populations. And perhaps most excitingly, that we can notice, so we are now able to offer highly customized services tailored to individual needs and preferences, which means some kind of personalization. However, I want to emphasize that there's another side of this story. And one significant risk is what we call financial exclusion. So as services become increasingly digitized, we risk leaving behind those who can't or won't adopt new technologies, often elderly or less tech-savvy populations. And this is a serious concern from the social perspective, indeed. And we also need to consider a systematic risk because as financial systems become more interconnected through technology, problems in one area can quickly spread to others. And of course, there is a never-present challenge of cybersecurity. And as we innovate, we create new potential vulnerables that need to be protected. And this is why balanced regulation is so crucial indeed, because we need regulatory frameworks that encourage innovation while providing appropriate safeguards. And I really often tell my students that good regulation should be like a good referee to present but not disrupt into the game. Next slide. So now let us talk about one of the most transformative developments in modern banking, which is open banking. So I really find this particularly exciting because it's fundamentally changing how banks and financial services work together. And at its core, open banking allows third-party developers, for example, to build applications and services around the bank's data through what we call APIs, which means application programming interfaces. And now, don't worry, by the way, too much about the technical term. Think of APIs as secure bridges that allow different financial services to communicate and share data safely. So, what makes this so revolutionary is how it promotes collaboration between traditional banks and fintech companies. For example, in the past, banks kept their data and services in closed systems. You can imagine a fortress with high walls, for example, and that is very similar. And now, through open banking, they are creating secure gateways that allow trusted partners to connect and build new services. And this has unleashed actually a wave of rapid innovation in several areas. And for example, we are seeing fantastic new applications in payments, where you can now manage multiple bank accounts through a single app, and personal finance management has been transformed dramatically. For example, apps can now analyze your spending across all of your accounts and give you even personalized advice. And in lending, lenders, for example, can quickly access to your data, your personal data, and assess your financial health by accessing this banking data. And that is often leading to faster and fair lending decisions. And what is also interesting in this is shifting banking from a closed competitive model to an open collaborative ecosystem. Next slide. So now I'd like to introduce you to embedded finance. And by the way, what you mentioned before, BNPL, it's I consider it as a part of the embedded finance more than a part of lending. So what is embedded finance? That is a trend that's quietly revolutionizing how we interact with financial services and in our daily lives. So it's quite fascinating because it's making financial services available exactly where and when you need them, even if you are not dealing with a bank directly. So let me explain what this means in practice. For example, embedded finance allows non-financial companies to offer financial services like lending, insurance, saving accounts, and payments directly within their own platforms. The question is, how is it possible? By means of APIs. So you might have expertised this without even realizing it. For instance, when you take a ride with Uber and pay seamlessly through the app, that's an embedded finance. That's an example of embedded finance. Or when Amazon offers you financing options for a large purchase, for example, or provides loans to its merchants, that's also embedded finance. And that is a very powerful tool, actually, and a very strong tendency of the modern finance. And the most what makes it particularly powerful is how it leverages big data for credit decisions, actually, because these kind of platforms already know so much about the user's behaviors and patterns. And an e-commerce platform, for example, knows your purchasing history, return rates, customer satisfaction scores, and so on. And this rich data can help them make more informed lending decisions than even traditional banks might make with just your credit score. And the really exciting part is the reach these platforms have, actually. Because they can offer financial services to millions of users who are already comfortable using their platforms. So it's a win-win situation because customers get convenient access to financial services and platforms get to expand their revenue streams. Next slide. Next, let us explore one of the most revolutionary developments in financial innovation, which is decentralized finance, or DeFi, as it's commonly known. So I find really this particularly fascinating because it represents a fundamental reimagining of how financial services could work. And what makes DeFi unique is that it allows traditional services, for example, things like lending, trading, and insurance, to operate without any intermediaries. And there is no bank, for example, or financial institution in the middle of the transaction, but instead, these services run on public blockchain platforms with Ethereum being the most popular one. So now let me explain why this is significant. For example, in traditional finance, if you want to take out a loan, you need a bank's approval, and the bank acts as a trusted intermediary here, for example, verifying your creditworthiness and managing the loan. In DeFi, smart contracts on the blockchain, implemented on the blockchain, automatically handle these functions based on predetermined rules, and no single authority's approval is needed here. However, I must emphasize that while this technology shows immense promise, it also comes with significant risks. And for example, there are regulatory concerns because DeFi operates in a relatively new and often unclear regulatory environment. And security is another, of course, is another major concern, because while blockchain itself is secure, the applications built on the top of blockchain can be vulnerable to hacks, for example. And we can't ignore the volatility in cryptocurrency markets, which can affect, for example, DeFi platforms. And now let's discuss how artificial intelligence and machine learning are revolutionizing financial services. So this is an area that's particularly exciting because it's transforming nearly every aspect of how financial institutions operates and serve their customers. Let me share some concrete examples of how AI is being applied. So one of the most visible applications is chatbots for customer service. And these AI-powered assistants can, for example, handle routine inquiries 24/7, freeing up human staff for more complex issues. But what's really impressive is how they are becoming increasingly sophisticated. For example, able to understand context and able to provide even personalized responses. And we're also seeing AI transformation and how AI transform financial institutions and, for example, make recommendations to their customers. And by analyzing vast amounts of data about customer behavior and preferences, AI can suggest financial products that truly match individual needs. And in the area of fraud detection, AI systems can analyze patterns across millions of transactions in real time. For example, identifying suspicious activities far more quickly and accurately than traditional methods. However, I think it's important to note that this transformation isn't without challenges, because while AI can automate processes and significantly lower costs, it also raises important ethical concerns, as you may imagine, particularly around bias in decision making. For instance, if an AI system is trained on historical Landon data that reflects societal biases, it might persuade some those same biases in the decisions. And the adoption of AI in financial services is still relatively low, and that's actually a good thing, because it gives us time to implement these technologies carefully and thoughtfully. And we need to ensure that as we embrace its capabilities, we are we are also addressing its limitations and potential risks. The next slide. So now let us discuss a critical challenge facing traditional banks today. How to rethink their innovation strategies in this rapidly evolving financial landscape. And this is particularly interesting because it's not just about adopting new technologies, it's about fundamentally transforming how banks operate and compete. And the key challenge for incumbent, banks is what I call the innovation balancing act, because they must optimize their existing business. For example, traditional banking services that still generate most of their revenue, while simultaneously exploring and investing in new innovations. And it's like trying to repair, and upgrade a plane while still flying. So, to address this challenge, banks are pursuing multiple strategies simultaneously, and many are setting up internal innovation labs. Like you can think of this as startup-like environments within the bank where teams can experiment with new ideas, for example, and technologies. And they are also accelerating their digitization efforts, moving traditional services online and to mobile platforms as well. And what is particularly interesting in how banks are approaching partnerships with fintech companies, because rather than viewing them solely as competitors, many banks are establishing accelerated programs, investment arms to collaborate with these innovative startups. And some are even going a step further, acquiring promising startups to quickly gain new capabilities and talents. And the most successful banks are those that recognize innovation is not just about technology, it's about cultural transformation. And they are fostering an innovation mindset throughout the organization, from, for example, the boardroom to the front line. Next slide. Now, let us explore what I consider one of the most fascinating aspects of financial innovation, which is the role of regulators.
Excuse me.
Yes,
It seems
yes.
to be actually the time for the break now. It's 7:30.
Slide number 730.
No, it's 7:30 at the moment. It's like the time, and perhaps we could make a short break.
Yeah, sure. So 7:30. So yeah. Excuse me. So I thought that the break should be at 7:40. Yes, it's okay. Let's make a break for 10 minutes.
All right, thank you.
Okay, now let's get back. Yes, and we go on with the current lecture, introduction into the digital finances. Well, let's get on the slide devoted to the regulators' role in fostering responsible innovation. So I would drag your attention on that the key challenge for regulators is striking the right balance, because on one side, they need to maintain the stability and integrity of the financial system, because maybe we all or somebody of us remember the lessons from 2008 financial crisis. And on the other side, they need to create an environment where innovative ideas can flourish. It's like being a referee who need to keep the game fair while letting it flow. And one of the most exciting developments here I've seen is the creation of regulatory sandboxes. So we can think of them as safe tested environments where fintech companies can experiment with new innovations under regulatory supervision. It's like having a laboratory where you can test new ideas without risking the broader financial system. And we are also seeing a shift towards what we call principle and outcome-based regulations. What does it mean? It means that instead of prescribing exactly how financial institutions should operate, for example, regulators are increasingly focusing on the desired outcomes. So this gives innovators more flexibility in how they can achieve regulatory goals. And what is interesting is how regulators are ensuring their frameworks promote competition while protecting customers. And they're recognizing that more competition often leads to better services for customers. But this needs to be balanced with the strong consumer protection, of course. Next slide. And now let us look ahead at where financial innovation is headed, because the pace of change is not just continuing, it's accelerating. As someone who's been following this field closely, so I can find the upcoming developments particularly exciting. And in general, there are three main forces driving this acceleration. First, customer expectations are evolving rapidly. Thanks to companies like Amazon and Apple, for example, people now expect seamless, personalized experience in all services, including financial ones, of course. And second, competitive pressures are intensifying as fintech companies and big tech firms enter the financial space. And third, regulatory frameworks are evolving to accommodate new technologies and new business models. And looking at these key trends, we are seeing a move forward and a move towards hyper-personalization, where financial services are tailored to individual needs and behaviors at an unprecedented level. For example, embedded services are becoming more prevalent, with financial capabilities being integrated into all kinds of platforms and apps. And we are also witnessing increased blockchain adoption beyond cryptocurrencies and AI-driven processes, which are becoming more sophisticated and widespread. And here's something crucial to understand also. This acceleration creates both opportunities and risks. And for example, for incumbent banks that fail to innovate, the risk of decline is very real. But for new entrants with innovative solutions, there is potential to rise quickly and capture a significant market share. And what I also would like to emphasize to you is that responsible innovation balanced with stable regulation is vital for sustainable growth in the financial sector. And therefore, we need to innovate not just for innovation itself, for the innovation's sake, but to create genuine value for society. Next slide. So that is almost the finish of the part one of the lecture. So let's sum up key points of the lecture, key takeaways. First and foremost, you should remember that financial innovation encompasses new instruments, technologies, institutions, and markets as well. It's not just about new apps or payments methods that you could think. It's a comprehensive transformation of how financial services work. So we discussed the three main goals driving innovation, as you can remember. First is efficiency in operations, broader financial inclusion, and improved regulatory compliance. And these goals often work together with successful innovations addressing multiple objectives simultaneously. And in terms of major directions, we explored several key areas like digital payments revolutionizing how we transfer money, alternative lending, democratizing access to credit, and robo-advisors transforming wealth management. And we also looked at blockchain applications that are creating entirely new possibilities in finance. And we also examined both sides of innovation, the benefits like lower costs and improved access to services, and the risks, for example, including potential financial exclusion for some groups. And open banking through APIs is enabling unprecedented collaboration between traditional banks and fintech companies, while embedded finance is integrating financial services into everyday platforms. And looking ahead, we see that as innovation accelerates, incumbent banks must rethink their strategies to stay relevant. And through all of this, balanced regulation remains vital for fostering responsible innovation while maintaining financial stability. So now there is a short quiz for you. Let's test your understanding, which is with a quick question. So I want you to think carefully about what we discussed regarding financial innovation. And here are several options. Take a moment to consider each option of the listed and remember what we discussed about what constitutes true financial innovation versus just regular business improvements. Tell me, please, write in the chat which answer is correct here for this question. The question is, which of the following is not considered a type of financial innovation? Please take a couple of minutes. Yes, thank you. The option third is quite right. Why? Because new ways of marketing exist in financial products. So because while marketing is important for financial services, of course, so simply finding new ways to market existing products, so that is that isn't qualified as financial innovation at all, because true financial innovation usually involves creating new value through new product, new services, technologies, and business models. Yeah, that is right. And here are several issues for discussion. Please, this is a conclusion of the first part of the lecture, and therefore, please think a little bit about any of this question, and write in the chat, please, what do you think about these issues? What you could notice in these issues, for example, or what could you add to this? Please let us take a couple of minutes for that. Just shortly. Okay, you can write your answers or your opinions while we are going on, and I will save the chat after the election, so I would be able to review your answers anyway. Yeah, great. Yeah, I understand that the answer might be too long, so never mind. So you can write it by the way, and I will review it anyway after the lecture. So here is a short glossary of the lecture, of this part of the lecture. And once again, I will provide you with the slides so you can go through it once again. Don't worry. See, any questions?